Joyce, the co-founder and economics teacher at the CANA Elite Education Center. Most students find it challenging to write good economics essay. In this video, I'd like to share with you the essay writing technique of this following topic. Okay, let's look into this question on indirect tax and PED as well as PES. Explain how the incidence of indirect tax depends on the price elasticity of demand and price elasticity of supply. Now, the rule of thumb of doing well in the essay, there are 6 things for explanation type of essay. Number 1 is to include all definitions. Number 2, diagrams. Number 3, analysis. For example, like explain what is there in the diagram or explain what you meant by a certain point. Number 4 is to include real-life examples. Number 5 is to avoid any major error, for example, mixing up indirect tax or subsidies. And number 6 is to show clear understanding of the demands of the essay, which means that you can come up with an essay within the time limit, so no unrelated materials in there to show clear understanding. Now, looking at this question, before we even go into the definition, I would start thinking, okay, what is a 1 or 2 sentence answer that I can hit it directly? So, explain how the incidence of indirect tax depends on PED and PES. Therefore, immediately I would have come up with 2 scenarios. One is when PED is smaller than PES. The other one is when PED is greater than PES. Now, when price elasticity of demand is smaller than price elasticity of supply, which means that when price elasticity of demand is more inelastic, it means that consumers is less responsive to a price increase than producers. Think about it. Indirect tax would increase the price, right? Therefore, if consumers would be less responsive to a high price than the producer, what would producers do if a tax is imposed? Would producers be willing to take on more of the tax burden? The answer is no. Therefore, the producer would pass more of the tax burden to the consumers, and they would take less of the tax burden. And that's how PED and PES would impact the tax incidence. Okay, so therefore, after understanding what is the right way to answer the question, then we go on to start to define the key terms. Now, in the introduction, there are several terms to be defined here. Number 1 is indirect tax. So indirect tax is the tax on expenditure of goods and services. The second term is PED. So PED measures the responsiveness of quantity demand to a change in price. Now, responsiveness already has the implication of percentage change, so we don't have to say responsiveness of percentage change. We can simply say responsiveness of quantity demand. Now, another thing, mind you, some students, they say quantity demand without the ED. Indeed, that's an economics term, so remember to put the ED behind the demanded, quantity demand. And price elasticity of supply measures the responsiveness of quantity supplied to a change in price. Great, everything is being defined. Now, we got to answer the question directly. Therefore, I would say that if indirect tax is imposed, right? If PED is smaller than PES, then the consumer tax burden or tax incidence would be greater than the producer's tax incidence. Vice versa. Then you have answered the question. So this is our introduction. Now, in main body 1, we need to go on to explain why is that the case that consumer incidence is greater than producer incidence when PED is smaller than PES. So body 1, we would go about to say the scenario when PED is smaller than PES. Now, so let's draw the diagram. Let's draw this diagram. When PED is smaller than PES, so we draw a steeper PED and a flatter PES. A steeper demand curve and a flatter supply curve. Now, first of all, when indirect tax is imposed, it increases the cost of production and reduces the supply. The market equilibrium then shifts from P1 to P2, and the quantity decreases from Q1 to Q2. In order to identify the tax incidence, first of all, we need to know where is the government tax revenue area. Now, it's very easy indeed. Government tax revenue equals to the tax per unit, which is this vertical distance over here, the tax per unit, times the quantity after tax. Therefore, the tax revenue received by government is actually this area, which is the tax per unit and the quantity Q2, the quantity after tax. So we are actually asking in this area which part is paid by consumer and which part is paid by the producer. Now, very simple. Consumer, they pay the upper part. The reason is because that the price goes from P1 to P2. Therefore, for every unit consumer bought, they have to pay P1 to P2 more over the course of Q2 units. And therefore, this area, I usually like to use the annotation in my answer. This one is the consumer incidence. Now, the bottom part, P1 to P3, is the producer incidence. And the reason being, before producer, they receive P1 for every unit sold, solidly, P1 for every unit sold. Now, even though the market price is at P2, however, that much, P2 to P3, because that's the tax per unit, goes to the government. Therefore, eventually, producer will only be able to pocket in P3 for every unit sold. Therefore, compared to the previous amount that they could solidly get, producer gets P1, P3 less for every unit sold. And therefore, this over the course of Q2 units. And therefore, this will be the producer incidence area. Great, we have got the right diagram. Then let's put things in the context of doing the essay. So first of all, I would say that when indirect tax is imposed, indirect tax would cause a higher cost of production, and that would cause the supply curve to shift from S1 to S2. Okay, now we have set the tone of how indirect tax would impact the whole the consumer and producer incidence. If so, the market price now goes from P1 to P2, and the quantity reduces from Q1 to Q2. And then the tax revenue received by the government is actually the area of P2, P1, P2, P3, CA. And then when PED is smaller than PES, we say that consumer will bear a higher incidence than the producer. The consumer incidence is represented by the area P2, P1, VA, whereas the producer incidence is represented by the area P1, P3, CV. So you can explain a little bit more by saying that this is because that consumer has to pay more for every unit bought over the course of Q2. And producer can only solidly pocket in less money from P1 to P3 for every unit sold. And that's why this is the two areas of the incidence. Eventually, we should explain in layman terms why is consumer incidence greater than producer incidence. And a good way to explain it is actually to say that because consumers are less responsive. The keyword is less responsive to an increase in price due to the indirect tax. Therefore, the producer would pass on the incidence, producers would pass on more incidence to the consumers. Okay. All right. Now, so last but not least, remember, we got to give real life examples. So what would be a real life example? Example could be medicine, where demand is very inelastic, but supply is relatively elastic compared to the demand. Okay, so that would give us a great first main body. So the other thing is that the end of the essay? Definitely no. We should do one more body 2, which showcase when PES is greater than PED. So this will be the flip side of the whole story. Now that we can actually do it very quickly because the idea is basically the same. So what we would do is that we would just do the same diagram, but indeed the diagram is slightly different because that now this time the PES is more inelastic than the PD. The PD is much more elastic. Okay. So we just draw the same diagram with different types of elasticity. Okay, so that would be the diagram, and we can also explain that this now becomes the consumer incidence, and this becomes the producer incidence in body 2, where PES is greater than the PED. Okay, and basically the explanation is all the same. It's the same as the previous explanation. We just have to flip the last bit over, which that consumers are more responsive to increase. Producers are more consumers are more responsive to an increase in price due to the indirect tax imposed, so that producers can pass on less incidence to the consumers. And we can think of a real life example. For example, manufactured goods. That will help to include all the aspects that the examiner would look for in the essay. And if you find this video helpful, please do like our video to show your support, and feel free to subscribe to our channel as well, because we will make more IB economics as well as videos of IB in other subjects.